Hey, welcome to the Shipper Update. I'm Mike Vincent here with our lead economist, Anthony Smith. What's going on, man?
Not much.
It is you. It is all you, my friend.
So last time we were up here, we were talking about weekly initial jobless claims.
Yes.
We saw that
Yes,
there
we
was
were.
a subtle decline, almost a rounding error, if you will, to 411,000 applicants for the most recent week. Not too much of what we were seeing before. As you can see, this downward movement was consistently hitting pandemic lows. So that kind of wimpy showing is kind of discouraging when you're looking at the overall trend that we were expecting. A lot of factors going into this. Of course, we spoke about people maybe being more hesitant to going back to the workplace. Maybe childcare is a little bit more difficult. Maybe they are looking to transition into a new field. We mentioned that. Or maybe some were coming into the initial unemployment realm because of work transition, saying you have to be vaccinated to come back into work, and people kind of refusing to take that. So we're looking at so many different variables. Also another one, metropolitan areas maybe inflating some of these numbers in comparison to some of the smaller regions, and kind of doing a peanut butter spread, if you will, of the overall country instead of region by region or state by state.
Yeah, you've got to look at the different micro markets to find out exactly what's going on, because it's completely different and different from industry to industry, right?
Exactly. You were just mentioning that before, looking at manufacturing. We're going to touch on that here in our next chart, looking specifically at manufacturing with non-defense capital goods new orders, excluding aircraft. So, of course, we're looking at that for business-to-business activity. And what we saw in the latest number was the report breaks out different orders and new orders. So in the blue line, we have non-defense capital goods new orders. In the green line, we have our very own flatbed outbound tender rejection index.
I know you love it.
I love it. It looks.
You're just going to change this to Anthony Smith.
The Anthony Smith index. I like it. I don't know how Craig is going to feel about it. But I love the FO try because we're looking at what's going on within flatbed capacity. And when we're looking at that upward movement, that tightening capacity, in addition to the tightening that's going on within manufacturing with capital goods spending, it's moving hand in hand. In the latest number, we saw that there was some kind of divergence from orders across the board. So we did see a subtle downward movement in some areas and some increases in other areas. So one of the areas that we saw increases in was durable good orders, which set a record pace in this latest number, while non-defense capital goods new orders overall had a slight tick down, but the still month-to-month movement is still going very strong. So overall, we are seeing good things within manufacturing. The momentum's still there. That upward movement, overall, that trend for new orders coming in is only going to lead into more realized production, and that's going to go into shipments, and that shipment's going to lead into more freight capacity or more freight volumes overall.
Yeah, so when we're looking at these things here, when I think about these things, non-defense capital goods orders, faux try, or the flatbed outbound tender rejects, which is the capacity constraints on flatbeds, which goes hand in hand with production, which is what we're looking at here, right? The non-defense capital goods. This is more indicative of strength of economy than e-commerce necessarily, right?
I'd say so.
And especially over the last year, right?
Yeah, this is upstream. And so it's definitely showing that there is some upstream momentum. Despite these price increases that we've seen from these commodity shortages and all these other difficulties upstream, it's still going, it's still persisting. That's not like traditional real inflation on those. This is more, there's demand. I mean, manufacturing sees it, they see that demand. This is what sustains it, not stimulus checks. Exactly. So we're seeing these businesses, but there has to be demand for these businesses, and these businesses have to make a profit. So when you're seeing this upward movement for these orders coming in, these production, these shipments, despite the price increases, those price increases aren't going to be taken and accepted for so long before they kind of get passed a little bit further downstream. So thankfully, we're seeing that consumers are still sitting on substantial amounts of savings. Discretionary spending is still up. So those e-commerce trends that we're seeing likely going to continue for some time now, at least for another month or so. I mean, we just had Amazon Prime Day, a lot of other retailers following suit. That's likely going to lead into July with some of those specials and deals going on. But throughout that, we are seeing that there is some upward movement across the board throughout the economy, despite these lagging or somewhat stubborn initial jobless claims for now.
There are now, so there's limiters out there. We can't get into those. We don't have enough time to get into those too much. But there's self-limiters on the economy, and there's limiters that are happening, and there's other events that are happening, like the moratorium on evictions.
Coming up.
That's coming up. Are you still bullish, even riding through that stuff?
Yeah, I think we're definitely going to be having to watch that closely, but it looks like there is a plan in place to have a lot of forgiveness. It's going to be some hoops to jump through for a lot of people, but the funds are there, and that's what it's going to be used for, likely.
Excellent. Got it. Thank you so much, Anthony.